Stock market review for today. What I wanted to break down in the stock market review is simply what we're expecting this week. The stock market itself, I'm going to look at the S&P 500, is kind of inching up a little bit higher and higher. But if you look at the 10-year yield, Treasury yields are starting to inch up higher and higher as well. The stock market may pause somewhat. We don't really seem to have much direction at this point. But with bond yields kind of inching back upward, more than likely the stock market will pause at this point and kind of slide a little bit. We got economic data last week, which showed that, you know what, the economy is kind of both simultaneously contracting in certain aspects and moving forward in other aspects. The Federal Reserve, anybody who's expecting that the Federal Reserve is done is likely probably correct, but we're still data dependent. Going into next year, we could easily see the data points we're looking at moving upward. I've got some data point breakdowns. We've got CPI tomorrow, and we also have the Federal Reserve on Wednesday. Let's jump in and I'll show you some charts for the stock market review. If you're just joining me for the first time, thanks so much. I just launched this channel about 2 months ago, and it's growing quite nicely. Thanks for those who are supporting the channel. I'm an economist, and I break down the economy first and foremost and show how that applies to the stock market. Given that, we are looking at non-farm payrolls. We just got these on Friday. Some of the news data points inside non-farm payrolls were not exactly cheerleading material that the Federal Reserve is completely done. One of the data points that I saw in there was total individuals employed increased, and those who lost their job decreased, which gave us a drop in unemployment from, what was it, 3.96 down to 4.71. It was about a 0.15 shift downward in unemployment because the number of people who are employed increased and those who lost their jobs decreased. There's a lot of variables as to why. We had the writers' strike and then UAW strike. Those individuals started coming back onto the payrolls. Non-farm payrolls themselves kind of moved a little bit higher. Expectations that I saw from some of the analysts, 160 to 180. They printed 199, which gives you an idea that this economy isn't exactly foot completely on the brakes. We'll see how that plays out. Core inflation report, CPI report due tomorrow. Expectations are that it will continue to slide lower and lower, but what if it doesn't? That's a key thing. And if you want to really kind of take anything away on the for this stock market review, it's that I don't believe inflation is magically going to hit 2%. I don't think the Federal Reserve is done. I think we're going to see the economy kind of slow down somewhat, then turn right back around along with inflation. And then the Federal Reserve will respond. We're not there yet. That's my opinion. I've been wrong maybe once in my life. We'll see how that plays out. But I'm talking way out into the end of 2024 and into 2025 that the Federal Reserve is likely going to have to start stepping back in and raising interest rates because inflation hasn't hit 2%. I think core rate is going to just sit there and nag at like 2.8, 2.7, 2.6, and just sit there and sit there. And then people are going to get real nervous and start hitting the sell button. So this is something that I'll put inside my stock market reviews on a regular basis. Focus on this. The other thing that I've pointed out regularly, the M2 money supply. Federal Reserve is going to keep interest rates higher for longer. They are going to restrict and constrict the M2 money supply. It isn't just core inflation. They need to vacuum out all that cash they flooded the economy with. In the meantime, U.S. 10-year Treasury yield has been trickling higher, especially after last Friday's number. Again, it wasn't exactly a number that you really kind of celebrate. On the one hand, the economy's still moving forward, showing resilience. On the other hand, inflation isn't exactly going downward, so there needs to be a balancing act, and we'll probably see a small contraction in the economy, then the economy turn right back around. Then people are going to get nervous. The stock market, here's the S&P 500 index itself, and as you can see, we kind of just keep trickling higher and higher and higher. How high will it go? it's really data dependent. Tomorrow morning we can get kind of an ugly number, and all of a sudden the S&P 500 is down sharply. We could get another number that's fairly benign but still kind of there. Treasury yields would trickle a little bit higher, and that could spook stock investors. But in the meantime, there's something else I want to show you. SOXX stock. This is the semiconductor ETF. It's been significantly outperforming the broader stock market, and I wanted to bring this into the stock market review simply because SOXX stock, the ETF for the semiconductors, if you're looking to outperform the S&P 500, say the SPY stock, the ETF on the S&P 500, this is a good way to do so. NVIDIA itself is getting pressured because the rate of growth that you're seeing from their revenue is slowing down. We saw NVIDIA stock, NVDA stock, sell off. Other semiconductor stocks are moving upward. The reason being, they think the market thinks that these companies are going to take a big chunk out of the growth that NVIDIA is gaining because of its AI. So it's sort of stealing from Paul to pay Peter kind of thing. But SOXX stock, the ETF for semiconductors, this is a great way to take advantage of these higher flying semiconductor stocks, which will see some big gains versus the broader S&P 500. And they've basically been following the S&P 500 to some extent. There was a pretty big dip, as you can see, in October, but that was the entire stock market. Since then, SOXX stock has outperformed the S&P 500. So I wanted to bring this into the stock market review simply because I wanted to show that although we continue to trickle higher and higher in the S&P 500, there are some areas, some sectors, and the semiconductor sector is obviously that sort of beast right there, that is significantly outperforming the broader stock market. Make sure to hit the like and follow button if you want to keep getting the stock market review. I'll see you in the next video, and I'll break down continually what's going to happen next, especially with inflation hitting tomorrow. We'll see you in the next video.